So tonight's session will not only focus on the reasons of the depreciating ringgit, we will also talk about how to invest your way out of it. Now, specifically, we will compare different types of local funds and see which type of funds charge the lowest fees and give higher returns. Yeah, quick disclaimer, not financial or legal advice. And let's dive right into the first topic of the night, which is on the Malaysian ringgit. So this is the US dollar MYR chart, and it is not looking too bright lah. Yeah, since the start of the year, ringgit has depreciated by 4.01% versus the greenback, and it has already approached its October 2023 low of 4.7830. It's nearing its all-time low of 4.88 in January 1998. Yeah, that was during the Asian financial crisis. And a lot of people believe that if the ringgit were to approach this all-time low, it's going to continue its downward trajectory all the way to the Rahma price of 5 ringgit. Now, before we get too political about stuff and blame the current administration or the previous administration, we have to take a look at several other factors that may have been driving the ringgit's strength or weakness. And the first one, we have to look at the dollar strength. So DXY over here is basically the dollar index. It is an index of the US dollar versus a basket of 6 major currencies, namely the euro, the Japanese yen, and the pound. And since the start of the year, you also see a similar uptrend, right? Plus 3.37%. And this shifts more evidence to the ringgit's weakness being mainly coming from the stronger dollar. And if we compare the US dollar to other currencies as well, such as the Singapore dollar, the Chinese yuan, and the Thai baht, the evidence becomes quite clear. It is the US dollar that is strengthening by a lot. Since the start of the year, USD SGD plus 2.07%, USD CNY plus 1.35%, USD Thai baht performing worse than us plus 5.33%. So before I proceed on to talk about why the dollar has increased so much in strength since the start of the year, we must understand why the currencies fluctuate anyway. Currencies fluctuate mainly due to supply and demand. Sure, there is market sentiment and psychology, there is technical economic data, but if you look at factors 2 and 3, right, at the end of the day, they will influence the demand for a particular currency. Right? And if demand for a currency is high while its supply remains constricted, then you do expect that currency to strengthen. This is just basic supply and demand logic. And a major factor that is affecting this demand for a currency over here is interest rates. A simple term, to keep everything simple, the higher the interest rate, the stronger the currency. But why is this the case? Let me give you a rhetorical example. Okay, so let's imagine a scenario between two banks. Okay, so Bank A gives you 3% for your fixed deposits. Bank B gives you 5.5%. Let's assume both banks are well capitalized and they are roughly the same size. So as an investor, which bank will you choose? The answer is pretty clear, obviously Bank B. And the same goes for interest rates set by global countries. If a nation's central bank were to hike interest rates faster compared to other central banks, then you do expect that nation's currency to strengthen. So now when we compare US interest rates versus Malaysia's interest rates, the answer becomes quite clear as to why the ringgit has performed so badly against the US dollar. US interest rates are currently at a 2 to 3 decade high, 5.50%. You can see just how much the Federal Reserve has raised the interest rates since 1 or 2 years ago, starting from 0.25%, raising all the way to 5.5%. Meanwhile, Malaysia, we are considered quite aggressive already. We started from 1.75%, but we are only back to our pre-pandemic level of 3.0%. And you combine this with your knowledge of, just now I talked about this, higher interest rate, stronger currency, then you sort of know why the US dollar has continued to strengthen in this scenario. To top on to that, to make matters much more worse for the Malaysian ringgit, US inflation recently came out and it missed expectations. In fact, in the past 2 months alone, US inflation has continued to miss expectations and has spiked back up again. And this obviously will remove hopes for the Federal Reserve to reduce interest rates earlier than expected. And it is this speculation that is driving the dollar up since the start of the year. Yeah, that is leading to the strength in the USD MYR pair. So hold up. Some of you may say that, hey, hold up, Shinji. Okay, I get your facts about the US dollar over here. What about ringgit versus rupiah? What about ringgit versus SGD? What about ringgit versus peso and so many other currencies out there? It is very obvious that ringgit is depreciating. And to that I say, sure. So for these notable currencies over here, right, they can be explained with interest rates. Okay, so Indonesia's interest rate is 6.0%, and Philippines' interest rate is 6.5%. So you take these two countries, it is quite obvious as to why their currencies are strengthening against the Malaysian ringgit. Now, as for the Sing dollar, this one is a whole nother different case. Because Singapore is a tiny nation, they do not rely on interest rates to control inflation. And I'll talk more about it during the Q&A session if you guys want to know why the Sing dollar has appreciated so much. Okay, so this is the case for these three currencies. As for other currencies, yeah, this one warrants further investigation. Okay, so moving on, yeah, Bank Negara Malaysia, do something. Turn on the jets for the Malaysian ringgit. Don't you guys have like a reserve? Use the reserve to strengthen the Malaysian ringgit, or perhaps hike the OPR. And some of you guys may say this. Contrary to popular belief, Bank Negara Malaysia, they do not have enough firepower to influence the long-term trend of the ringgit. They only have enough funds to reduce the day-to-day volatility of the Malaysian ringgit. So today, let's say Malaysian ringgit USD opens at 4.75. Tomorrow, we won't see it opening at 4.9. Yeah, that's because Bank Negara Malaysia is reducing this volatility by utilizing their forex reserves. Now, in the case of proposing to hike the OPR, well, it's not a bad proposal, but you have to understand that OPR hikes are meant to tame inflation. Okay, and since Malaysia's inflation has moderated to Bank Negara Malaysia's target of 1.5% recently, there's really no motive for Bank Negara Malaysia to hike the OPR just to strengthen the ringgit and unnecessarily burden citizens. Now remember, hike the OPR, sure, it leads to a bit of ringgit strength, but what happens to your loans? Particularly your mortgage loans and your new car loans and basically loans in general. And if Bank Negara Malaysia continues to hike the OPR aggressively, then Malaysia will most certainly fall into a recession. So what now? Well, if you take a look at the Federal Reserve and US inflation not meeting expectations and Bank Negara Malaysia stuck in a rock and a hard place, in between a rock and a hard place, yeah, then you will see that more downward pressure on the ringgit is likely to continue. Okay? Which is why diversification is important. Now today, if your portfolio comprises of only assets in the Malaysian ringgit, then obviously you must be crying right now because ASB, ASM, FD returns are not enough to overcome the depreciation of our falling ringgit. Okay, so a few ways to diversify over here. I think a few weeks ago I talked about it also. Invest in foreign assets, yeah, US stocks or UK stocks, whatever, US ETFs, etc. This can be done through Rakuten Trade. Rakuten allows you to invest both in US and Hong Kong stocks. Later I will send you guys a link. Invest in foreign currencies. Yeah, this one can be done through Wise. Okay, so Wise allows you to hold foreign currencies at a small fee. When you convert those currencies, they do charge a small fee. And finally, which is the thing that we'll be focusing today, is to invest in funds that hold foreign assets, yeah, specifically local funds. And these days, there are so many different fund providers out there. Yeah, but the notable ones include Touch and Go Invest, Versa, and Public Mutual. So we will compare these three fund providers. Yeah, starting with GOInvest. So to start to invest in GOInvest, all you need to do is open up your Touch and Go wallet and then scroll down. There is this like a small icon over here, GOInvest. Tap on it and you'll be able to explore more. So the perk of GOInvest is that they have a lot of aggressive funds. I think they have like 5 or 6 aggressive funds. And the exposure is to the global markets, not only tied to the US market. You can see over here, Principal Dali Global Equity Fund, 8.63% return since November. And then its top holdings is in BNB Paribas, Comgas Growth, a Europe company, Tencent, Alibaba, and more. So the exposure over here is in global markets. Meanwhile, there is the Principal Global Titans Fund, which mainly invests in US equities. You can see the top holdings: Apple, Microsoft, Amazon, Nestle, and more. And finally, you have the Principal Islamic Global Selection Aggressive Fund, which invests in global markets, mainly in mixed assets, equities, sukuk, gold ETF, money market instruments, and deposits. So this list that I'm providing over here is not exhaustive. GOInvest, they still provide many different types of funds. So in the app itself, make sure you check what types of funds that you like, whether you want it to be Sharia compliant or not, and proceed on to invest if you're interested. Okay, so perks aside, one big con of GOInvest is the sales charge. Okay, when you begin investing, you are already at a 1.5% loss. So meaning if you want to cash in 1,000 ringgit, the amount that is invested is only 985 ringgit. So there's a 15 ringgit loss over here due to the sales charge. Then there's also the annual fees. Management fee 1.8%, trustee fee 0.07%. So you add it up together up to 1.87% annual fees. And fees matter. Okay, so to give you an idea over here, let's say you every month you put in 500 ringgit. You start with zero, you put in 500 ringgit to a fund, and you expect it to grow at 7% per annum. Okay, at the cost of a 2% fee every year. So after 15 years, how much will you have? Well, with a 2% fee, you will have 134,000 ringgit. Without the fee, you will almost have 160,000 ringgit. Now these two, the difference is 20%. So over 15 years, fees really eat into a lot of your profits. So if you guys are investing in any funds right now, I beg you guys to go and check whether the fees are high or not. Because over the long term, that will definitely heavily affect your profits. Now let's talk about funds which have lower fees. This one is from Versa, which I find quite attractive. Okay, so the first one is Versa Global I. They might as well call it Versa USI because majority of the funds are invested in US companies. Now, Microsoft, Alphabet, Visa, Apple, Eli Lilly, Amazon, all these are US companies. Okay, at this rate, just call it a US fund, right? But the attractive thing about this is that there is no sales fee. Unlike GOInvest's 1.5% initial sales charge. Management fee, trustee fee are pretty similar to GOInvest, up to 1.85%. And what about the other one, which is Versa Growth? Versa Growth is different compared to Versa Global. They are different funds. So Versa Growth, they mainly invest in US ETFs. iShares Core S&P 500 ETF. There is the Vanguard Total Stock Market ETF also. And there's also the USA Islamic ETF. And this makes up about 40 to 50% of their fund size. Similarly, no sales fee. And the management and trustee fee is much lower. You can see over here, only about 1% per year. So moving on, is public mutual. This one, a lot of people, I think you guys are familiar with this. I decided not to choose any funds because public mutual, they offer too many funds. For their aggressive section alone, right, they have like 100 different types of funds. So you guys should decide for yourself. Ask the manager, right? You have to contact the client, the manager, the fund provider itself on what type of exposure you want to have. So the biggest con of public mutual over here is the very high initial cost. Up to 5.5% sales charge. So I already think that GOInvest's 1.5% fee is pretty high. So let's not talk about public mutual, up to 5.50%. And then the management fee, trustee fee, pretty standard over here, up to 2%. And obviously that will affect your profits over the long term. So that brings me to the end of my short and sweet presentation tonight. Hopefully you guys learned something. So quick shout out to all our Patreon members. Thank you all so much for your support. Andrew, Wendy, Edward, Alex, CC, Urshad, Caveman, Balls, Kelvin, Tommy, Jinkang, Adrian, JS, Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Raizan, Hudson, G, Jeffrey, Lawrence, Lukman, Lufeni, Will, Jai, Jack, and YC, as well as all of our learner members. Really, none of this would be possible without all your support. I've seen quite a few interesting questions from you guys. Let me just begin to answer them. Hi, I've noticed Versa has released a new fund called Versa SGD. Any comments on that, on investing into it? It's pretty straightforward. SGD denominated assets is moderate risk. And the top holdings include DBS Group into banks are basically very safe, very a bit conservative investments, yeah, OCBC and UOB. The thing that you got to know is not Shire compliant and the annual management fee is 1.58%. Okay, so if you want to get exposure into Singapore assets and you believe that the Sing dollar will continue to appreciate against the Malaysian ringgit, then it's a good opportunity to diversify into Versa SGD. What does the management fees in Versa means? Besides, is it withdrawable anytime? Right, yeah, funds inside Versa, any type of fund inside that Versa provides, except PRS, you can basically withdraw anytime. Yeah, with 2 to 3 days, 2 to 3 business days delay lah. Okay, so GOInvest is also the same thing. So whenever you invest in any of these funds, right, you can decide to withdraw anytime. Yeah, it's just that sometimes the delay can be up to 4 to 5 days, lah, depending on how fast they process your withdrawals. Lah. Now, in the case of public mutual, I'm not too sure if you can withdraw some funds instantly. Yeah, you have to take a look at their fund prospectus, and then after that, make sure you contact the manager. Yeah, this is why I don't like investing with public mutual. Right? It's a lot of hassle. You got to contact the manager, then they got to brief you, then after that you got to sign up, got to open this app, that website, all this, and the fees are also quite high. So yeah, in terms of what does it mean by fees, right? Actually, public mutual, they do specify this, and this will relate to Versa as well. Let me just quickly show you guys. So the link that I provided to you guys just now is Public Mutual's top performing funds, which you guys can go and check it out. And after that, within the top performing fund itself, you can have an overview of what the fund is investing in, basically the product highlight sheet, which I highly recommend you guys to go and take a look. Now, before you guys invest in any of these funds, okay, tonight, just take a look, just go and tap on fund info and take a look at the fund's prospectus so that you guys really understand, apart from these holdings, where your money really goes to. Okay, and what are the specific fees that the fund charges? You can see basically a good breakdown of the fund itself and what type of assets they invest in, whether it's foreign assets, local assets, and then they give you a breakdown of the management fees and sales charges also. So what it essentially means is that management fee, trustee fee, they charge you on an annual basis based on the net asset value of the fund. To keep things simple, right, if the fund didn't make any profit this year, in fact, the fund goes to a loss, then the management fees and the trustee fee will be lesser because the net asset value of the fund is smaller. But if the fund grows into, like, let's say 17 or 18% growth a year, then you do expect the fees to be slightly higher, though it is still at that 1.8 and the 1.86% range. Okay, because it is based on the net asset value of the fund. If the net asset value of the fund increases, meaning the fund makes a profit, then the management fee, trustee fee will be higher. How does it compare to investing into self-chosen US equities? Would you lose more in terms of currency fluctuation? This is a perfect question. Okay, when it comes to investing in funds, right, they are pros and cons. The first pro is that this is an actively managed fund. Yeah, all these funds that I show you guys today, right? I'm sorry, they are actively managed funds, meaning their holdings will change. Yeah, the fund manager will take profits on some holdings, they will cut loss on certain holdings, etc. etc. Sometimes, if they deem that Microsoft is no longer worth it to invest, they will change it, they will swap it in order to maintain the interest or the yield of the fund itself. And so it can potentially get higher returns, but at the cost of higher fees. Yeah, but when it comes to handpicking your own US stocks, okay, this one you can also make a lot of profit, but you gotta know when to take profits, you gotta monitor the markets, you gotta make sure this stock you choose is good, right? In the case of Apple, I just put you a very simple question. How sure are you that Apple, if you're planning to invest in it long term, okay, how sure are you that Apple will continue to be the tech giant it is today in the next 10 to 20 years? Are you very sure that there is no other Apple companies lying in the midst right now waiting to overtake this giant? Okay, so this is the risk of hand picking stocks. Yeah, you got to make sure you pick properly, and you got to make sure it is the right choice. Otherwise, you will lose quite a bit of money. Which is why my investing strategy is very passive. I mainly invest in actively managed funds or US ETFs. Okay, so hope that answers your question. Thanks for the amazing sharing. Yeah, thanks for being here, guys. Would like to understand more about the context of MYR against SGD for the comparison earlier. Okay, so in simple terms, this will take me another 20 to 30 minutes to explain. But in simple terms, you have to understand that when it comes to the Sing dollar, Singapore directly influences the exchange rate. Okay, because it is a tiny nation and it mainly imports stuff into the country. Okay, they mainly rely on imports. So if we have a stronger currency and we rely on imports, that will make imports cheaper, thus lowering inflation. Yeah, which is why the Singapore Central Bank themselves, in the past year or two, they have been desperately buying back Sing dollars in the market, strengthening the Sing dollar in order to lower the cost of imports and lessen inflation. So when it comes to SGD, right, not only the people in the market, they are buying Sing dollars, the government is also pumping Sing dollars. Well, that's in the past, okay, until inflation has fallen back down to a more manageable level. But in 2022 to 2023 itself, this big parabolic rally that you see, right, is not only due to global investors trying to acquire the Sing dollar, it is mainly due to the Singapore government buying back Sing dollars, strengthening Sing dollars in the market in order to reduce local inflation. Okay, so this is why you got to understand why Sing dollar is so high, not just against the Malaysian ringgit, but against all the other currencies in general, because that is the main way for them to lower inflation. Okay, so yeah, hopefully I didn't confuse you even more, but if I did, I'll send you guys a short article later. Any thoughts on crypto? Not much, but if you guys are interested to invest, if you have 0% exposure, then you can decide to get a bit of exposure right now. Just make sure you adhere to your own risk profile. And so regarding crypto, right, portfolio managers, they generally don't recommend an exposure of more than 15%. If you are a super high risk investor, if you're a low risk investor, 1 to 3% allocation is enough. So let's say your portfolio today is 10,000 ringgit. Yeah, so maximum that you can allocate if you're a super aggressive investor is you take 10,000, you multiply by 15%, yeah, 1,500 ringgit. Okay, so crypto, a very volatile asset, make sure you manage your risk accordingly. Sorry, can you repeat on the expectations of USD? Is it expected to strengthen further? Well, this one entirely depends on what is happening over at the US. Recently, US inflation has continued to spike back up. It continues to be unstable, not going down a linear path like what the Federal Reserve is expecting. You can see the recent trend over here, right? It's kind of like rocky. And if this continues to remain rocky, then the Federal Reserve will take longer time to reduce interest rates. At the global market right now, everybody is looking at the Federal Reserve. When are they going to reduce interest rates? And when the Federal Reserve is going to reduce interest rates highly depends on the inflation data. Okay, so if you are confident that in the next few months, US inflation will continue to be this rocky, will be this spiky, right? That will lead to a more stronger dollar, consequently a weaker Malaysian ringgit. Because in Malaysia itself, Bank Negara Malaysia, they can't really do much. Yeah, they're stuck in between a rock and a hard place. They can't hike the OPR because that will lead to a recession. They can't reduce the OPR because that will make the ringgit fall even further. So all we need to look at right now is what is the US planning to do. Right, so yeah, hopefully that gives you a good insight. Does investing in these global funds also eventually allow gain in FX? Of course, definitely. Yeah, the entire reason of investing in these foreign funds itself is sort of like making a double profit, right? So these returns that you've seen over here is not the most recent returns, The most recent returns, which I've written in the newsletter, which you guys will have access to if you're a patron member. Okay, so just saying, the most recent returns over here is 18.02% since the fund's inception. Okay, this one obviously includes the depreciation of the Malaysian ringgit also, which is really why if your portfolio is only invested in the Malaysian ringgit, then you'll be in quite a bit of a loss right now, okay, which makes sense. makes a lot of sense to invest in funds that have exposure in global equities. Because if the ringgit were to depreciate, and if these funds invest in stocks like Apple, Microsoft, Amazon, and Nestle, and they are priced in USD, and obviously the performance of these funds will improve. This is just I think a bit of logic over here. So want to know more why SGD keep going up? Yeah, I explained a bit just now. What about ETFs like S&P 500, Vanguard, etc.? We can customize StashAway to invest in these. Is it a good idea for a long-term investment? This one depends on what type of strategy that you're looking for, right? Just now I talked about the pros and cons of hand-picking stocks, and also the pros and cons of investing in actively managed funds. So what you're talking about is passively managed funds. Yeah, so these ETFs that track the US indices or a specific index, they are called passively managed funds because they don't really change their investments, right? And this one, the pro about it is you entirely get the gain of the US market. So let's say you're investing in, just now what you say, the Vanguard Total Stock Market, right? Yeah, Vanguard. So I'm assuming it's Vanguard Total Stock Market, which is VTI or VOO, short form for those. Yeah, this one, the pro about investing in this, first one, is that there's very low fees. And because this is a passively managed fund, therefore the fees will be much lower compared to the funds I mentioned just now. Yeah, and secondly, you get to earn the profits according to market movements. So I just draw up this VTI over here and compare it to the S&P, you'll be able to see that it is pretty much almost one-to-one. Actually, it is supposed to be one-to-one, okay? So yeah, you get to earn directly the profits of the S&P rather than the performance of the fund itself. So let's say if this year, the actively managed fund is not performing really well, yeah, because the fund managers themselves are not really doing their job. This is where ETF comes in at a significant advantage, yeah, because you will earn directly what the index, how the index is performing. Yeah, and there are many alternatives to this, not just VTI. There is also VOO, okay, which is the Vanguard S&P 500 ETF, okay. There is also QQQ, Investco Unit Trust Series. This one invests in the Nasdaq. All of it tracks the US index market. And I wrote about this I think a few weeks ago. You guys can read more about it. And if you are interested to invest in it, my main platform is in Rakuten Trade. I don't invest in StashAway because StashAway is just too a lot of hassle to invest in StashAway. So yeah, you guys can check it out here. There's also my Rakuten Trade referral over there. You can go check it out. Is there a recap or summary of this session? I missed out the first half. Sadly, you will have to be a patron for this. Yeah, because patrons, they will have access to the full recording, which is, yeah, over here. Early access. Watch our weekly analysis before the public. So after this, I'll proceed to edit the recording and you can watch it tomorrow morning if you're a patron. So yeah, let's move on. Why invest into these kinds of various funds though, since they are charging you with all kinds of fees? Just DCA into US ETF, set and forget. Okay, so this is also a very good question, right? Because so the main purpose of investing in these funds is diversification. And these are actively managed funds, meaning that they sometimes will change their holdings in order for the fund to make more profits. So if you were to invest in the US market alone, sure, it's a good place to diversify your assets. But what if, a big if, the US market undergoes a recession like what we've seen in 2021 to 2022? In this case, you will definitely have to take a look at managed funds, actively managed funds, in particular those that have exposure to different types of equities. Yeah, mainly like this, global markets, BNP Paribas, Comcast Growth, Tencent, Alibaba. Yeah, so it's sort of like a way to balance out or diversify your portfolio rather than just focusing on the US alone. Okay, so yeah, hopefully that answers your question. Does the falling MYR affect local blue chip stocks, and in what manner? Well, I would say the main way it affects local blue chip stocks is that the perception of it, right? The profit that you make, you perceive it to be lower lah, because now you're comparing it to the US dollar, and since the US dollar has depreciated by 4 to 5%, then you take a look at your Maybank this year up 3%, then you deduct it, it's actually a 2% loss if you are comparing it in terms of foreign currencies. But if you're not comparing it in other currency terms, then it doesn't really affect local blue chip stocks. Okay, So yeah, I think that brings me to the end of my session tonight. Yeah, there's a lot of questions from you guys, many interesting questions. Thank you so much for joining. I will see you guys next Sunday, 10 p.m. Bye guys. Good night. Stay safe.